Hello, Market Watcher. I'm David Ravel, and this is Value Side for Monday, December 27. For all of our articles and podcasts, visit valueside.com. Today, we hear from some old names just ahead. Well, today we're just 5 trading days away from that final trading day of the year. On that day, all of the positions that you hold in your portfolio will be recorded for posterity. If you're a public fund, such as a mutual fund, hedge fund, pension, or other fund, these are the positions upon which you will be judged. What makes this final quarter of 2021 so very interesting is the dramatic change that we've seen in the various groups of stocks. Now, for years now, we've seen one group, technology, dominate the top names of the best performers for the year. Names we're all familiar with: Apple Computer, Amazon, Alphabet, Google, Microsoft, and Facebook. This is the group with the best performances year after year. For any portfolio manager, this is the group you want to hold in your fund. It shows that you've understood the forces at work in the economy, which have been the most favorable for big tech in general and these 5 companies in particular. But not this quarter. This quarter, everything changed, and it clearly reflects the major changes in our economy. Ask the average person on the street what the dominant economic trend is currently, and they'll immediately tell you it's inflation. They see it at the gas pump, at the grocery store. In fact, in everything they do, prices are higher. Skyrocketing, in fact, at levels most of us haven't seen in a lifetime. And the markets have been quick to recognize this new inflation trend. That's the strength of our free and open financial system. Literally millions of investors making independent decisions that can quickly pivot to new trends and directions in the overall economy. As they did this quarter, when they rewarded 2 groups whose businesses are centered on real, tangible assets, as opposed to the virtual assets of technology. With just a few days left in the quarter, the number 1 performing stock group has been the basic materials sector, such old-line companies with familiar names as Dow Chemical, DuPont, Sherwin-Williams, and Ecolabs. Companies who make things, tangible things, which rise in price with the overall acceleration of inflation. Likewise, the second best performing group also deals in very tangible assets, real estate. You can't get much more tangible than real estate. And as the millions of homeowners across the country can attest, it's been a very good time for home prices. The real estate sector is dominated by real estate investment trusts, REITs with such names as American Tower, Prologis, and Crown Castle. None of these companies in either basic materials or in real estate are new names, companies with some breakthrough technology or innovation that promises to set the world on fire. No, these are established, tried and true companies whose one new dynamic is the appreciation of their underlying products and properties. It's inflation, pure and simple, which has brought them to their number 1 status this year. And it is this underlying inflation which now is causing major realignments in the nation's capital structure. Wall Street is at the very beginning of a process which, if it continues, will take funds from allocation which was tech-heavy to one which is now reliant on this new macro trend of inflation. It's of a monetary decline that we're seeing. Technology relied on a strong dollar to maintain its competitive status worldwide. These hard asset companies, however, basic materials and real estate, automatically benefit from their hard asset appreciation due to the very weakness in the dollar. It's the kind of major shift that we only see rarely, but clearly the markets have already recognized this new inflation-based change. Well, it's a very light week for economic data this week. We will get the latest of the Dallas region's manufacturing index in just a little bit. And then this evening, Japan will also report on their industrial production. There are no major corporate earnings reporting today. And that's the value side for Monday, December 27. For all of our podcasts and blog posts, visit valueside.com. I'm David Ravel. ValueSide is independently written and researched. The views expressed are strictly my own.